Most people imagine retirement as a finish line. You work for decades. You follow the rules. You pay into the system year after year. And when the paychecks finally stop, you expect life to slow down. Fewer deadlines. Fewer surprises. Fewer financial curveballs. But retirement is not as predictable as it used to be. Across the United States, something is shifting beneath the surface. It is not loud. It is not dramatic. It does not arrive as a breaking news alert. Instead, it moves quietly through tax codes, legislative sessions, and updated rules that most people never think to check once they stop working. And that quiet shift is changing how Social Security income is taxed. For decades, retirees accepted Social Security taxes as a fixed reality. You earned the benefit, you received the check, and depending on where you lived, a portion quietly disappeared before it ever reached your bank account. Many assumed that was simply how retirement worked. That assumption is no longer safe. Several states are actively dismantling Social Security taxes. Some are doing it slowly, widening exemptions year by year. Others are using tax credits to erase the bill before it is ever paid. And a few states have gone further than anyone expected, eliminating Social Security taxes entirely in a single move. This matters far more than most retirees realize. Two people can earn the same Social Security benefit, same age, same filing status, same lifetime earnings history. Yet one of them may keep every single dollar of that income, while the other still loses a noticeable portion every year. The only difference is the state line they live behind. For retirees already living on fixed income, that difference can mean comfort versus constant calculation. For those planning where to retire next, it can quietly shape the entire experience of retirement without ever appearing on a checklist. Some of these changes are already in effect. Others are finishing their rollout in 2025 and 2026. And at least one state erased Social Security taxes almost overnight, moving faster than analysts believed possible. Today, we are breaking down the states that are actively pushing Social Security taxes towards zero, not through speculation, not through promises, but through laws that are already passed, already active, and already changing real lives. We have reduced the list to the states where the impact is strongest, the direction is clearest, and the relief is most meaningful. By the time we reach the final state, you will see which one moved faster and more aggressively than any other in the country. Let's begin. Number 5. Utah. Utah is one of the most misunderstood states when it comes to Social Security taxes. On paper, it still looks like a state that taxes benefits. And because of that, many retirees assume nothing has changed. They glance at an outdated chart, see Utah listed among taxing states, and move on. But the reality is very different. Utah built its system around a retirement tax credit designed to cancel out Social Security taxes for most retirees. Instead of removing the tax outright, the state neutralized it through credits that offset what would otherwise be owed. Social Security income is included on one side of the return. Then, through the retirement credit, the tax is erased on the other side. For single filers earning below $45,000 in adjusted income or married couples earning below $75,000, the credit eliminates the tax completely. The end result is simple: zero paid. What makes Utah's approach especially powerful is flexibility. Credits can be expanded without rewriting the entire tax code. They can be adjusted quietly as budgets allow, and they can grow over time without triggering major political resistance. For retirees, this means the complexity stays on the form, not in their wallet. Most Utah retirees now receive their Social Security income without paying state tax on it, even though the law technically still lists it as taxable income. In practical terms, the tax rarely survives the return. Utah demonstrates an important lesson. Removing a tax does not always require deleting it from the statute books. Sometimes, canceling it out achieves the same result with less friction. Number 4. Connecticut. For years, Connecticut had a reputation that pushed retirees away almost instantly. High taxes, high costs, very little relief. That reputation no longer fits when it comes to Social Security. Instead of making a sudden headline-grabbing move, Connecticut chose a slow, methodical strategy. Beginning in 2019, lawmakers started raising the income thresholds that qualify retirees for a full Social Security exemption. Every year, the line moved higher. Every year, more retirees qualified. As of 2024, single filers with adjusted income below $75,000 and married couples below $100,000 pay nothing on their Social Security benefits at the state level. No partial exclusions, no sliding scales, no complicated worksheets, full exemption. Even retirees who earn above those thresholds often pay less than they once did, and the trajectory remains clear. The exemption continues to expand, and discussions about complete elimination are now happening openly. This is not a temporary program or a pilot experiment. It is a structural shift in how Connecticut treats retirement income. For middle-income retirees especially, Social Security taxation in Connecticut has already disappeared, and with each passing year, that group grows larger. Number 3. New Mexico. New Mexico did not take the slow route. Instead of stretching change across multiple years, the state moved quickly with a single piece of legislation that reshaped Social Security taxation almost immediately. House Bill 163 dramatically expanded exemptions for retirement income, including Social Security. Under the new structure, single filers earning below $100,000 and married couples earning below $150,000 receive full exemption on their benefits. Those thresholds capture the vast majority of retirees in the state. Roughly 9 out of 10 retirees now pay zero state tax on their Social Security income. What makes New Mexico stand out is speed. There was no extended phase-in period, no drawn-out timeline. The impact was immediate, and many retirees felt the difference in the very first tax year. And lawmakers are not done. Discussions continue around removing the remaining limits entirely, which would place New Mexico among states that have fully eliminated Social Security taxes regardless of income. For now, most retirees are already benefiting, and the direction is unmistakable. Number 2. Colorado. Colorado approached Social Security taxation with something retirees value deeply: certainty. Rather than relying entirely on income thresholds that change with inflation or credits that can be modified quietly, Colorado used age as the dividing line. If you are 65 or older, your Social Security benefits are fully exempt from state income tax. No income caps, no phase-outs, no partial exclusions. Once you reach the qualifying age, the tax disappears. This change took effect in 2022 and applies universally to qualifying retirees. For those under 65, Colorado did not ignore them. Instead, the state created a gradual expansion of exemptions that increases year after year, allowing more retirees to qualify earlier in retirement. The long-term goal is clear. Social Security taxation is being phased out entirely. Colorado reinforced this direction by lowering its overall income tax rate through voter-approved measures. This was not an isolated decision. It was part of a broader effort to reduce the tax burden, especially for people living on fixed incomes. When combined with strong healthcare access, stable local economies, and a high quality of life, Colorado quietly becomes one of the most balanced retirement environments in the country. The appeal here is not flashy incentives, it is reliability. The rules are clear, the benefits are locked in, and the direction is firmly set. Number 1. Nebraska. Nebraska did not promise to eliminate Social Security taxes. Nebraska did it. Through legislation known as LB 873, the state implemented one of the fastest phase-out plans ever passed. That plan is now complete. As of the 2024 tax year, Social Security benefits are fully exempt from state income tax for every Nebraska resident. No income limits, no age requirements, no special forms. Zero means zero. But Nebraska did not stop there. Understanding that property taxes often weigh just as heavily on retirees as income taxes, the state expanded relief through additional legislation. Qualifying residents can now receive property tax refunds that, in some cases, cover nearly the full amount paid. This is not a one-time credit. It is an ongoing program that compounds year after year. In just a short period, Nebraska transformed itself from a state that taxed Social Security into one of the most retiree-friendly tax environments in the region. For retirees who value simplicity and certainty, Nebraska's approach stands out. The tax is gone, the policy is finalized, and the benefits are already in effect. What this means for retirees? The countdown tells a clear story. Social Security taxation is disappearing in many states. Some states, like Utah and Connecticut, use exemptions and credits to shield most retirees quietly. Others, like Vermont, Colorado, West Virginia, and Missouri, eliminate the tax aggressively, offering certainty and predictable relief. Nebraska paired elimination with property tax relief, adding another layer of benefit. The implications are huge. Retirees who check their eligibility may save thousands of dollars each year. Those planning where to retire can now consider tax policy as a major factor in quality of life. Over a long retirement, even modest exemptions can compound into significant financial security. The landscape is shifting, quietly but decisively. States are competing for retirees, and Social Security taxation has become a key tool in that competition. For anyone planning the next chapter of life, staying informed is no longer optional. Understanding which states provide the most relief could define whether retirement is a period of comfort or continued financial strain. The retirement map of America is changing, and those who pay attention will be the ones who benefit the most.